I want to start off this 2025 edition of the Economics Weekly with a brief recap of how the economy is doing and where do I think it's heading in 2025. So, we don't have final GDP numbers for the 2024 yet. We do have the third quarter's growth, which you'll recall was a contraction of 0.3%. So, whatever growth happens for the full year has to have happened in the fourth quarter. So there are some indicators of how the fourth quarter went, and they are relatively possible. You can look at this from the spending side or from the production side. On the spending side, consumers really made a big contribution to the economy in November and December. So in the Statistics South Africa data, there's already an indication of greater retail sales, including Black Friday. And then in the Bank South Africa data, it also shows that consumers had a good December and really did some spending on holiday. Those are positive signals. We don't have a lot of investment data on the spending side at a high frequency. So we'll have to see how investors responded to the economy and the optimism that we found in the markets towards the end of last year. We know that government spending is under pressure, so we don't really expect government to make big contributions to GDP growth in the fourth quarter of last year. The last component there is net exports. Now, exports haven't been doing well. Different categories, different levels of performance, but we know that cars have been struggling, and that's typically a big part of our exports. So we'll see how that turns out when we get that final numbers for the fourth quarter and the full year 2024. On the production side, the high-frequency data was not that optimistic. Production in manufacturing and in mining declined in October and November, and we're still waiting for those December numbers, which is usually muted because it's the holidays. So on the production side, we'll have to wait and see what happens with economic growth in that last quarter of the year. There's a lot of optimism, though, about growth in 2025. The predictions are for anything between 1.6 and 2%, and even the Reserve Bank governor recently said he expects closer to 2 than to 1.6, which is a really good sign. The growth is expected to come from consumers, but also from investment. That some of that optimism that we see in business confidence indices really starts to spill over into investment, and companies expand locally, and that becomes a driver of economic growth. The other big indicators of how the economy is doing is unemployment, of course, but that's rather persistent and there is no high-frequency data available. We'll have to wait for the fourth quarter number, but don't expect major changes up or down. Unemployment in South Africa is structurally high and likely to remain like that. Prices is the other big indicator, and inflation remains at a very low level. The December CPI inflation rate is 3%, which is at the bottom range of the Reserve Bank's target band, and there is really across a broad spectrum of goods and services, prices are inflation is in decline. So price levels might be similar, but they are rising much slower than they were a year ago. Now, we saw the positive spillover from that in yesterday's repo rate decision. The Monetary Policy Committee decided to keep the repo rate, or they reduced the repo rate by 25 basis points, and that is really relief for households in this first quarter of the year. So there's a little bit more breathing room if you're paying less for your house and your car and other installments that you have to repay. That's a big benefit and puts money back in the household budget. It also makes it possible to weather the fuel price increase that we're expecting in February if you have a bit more breathing room on the interest side. So the Reserve Bank is, of course, concerned about upside risks to inflation. And those upside risks are not really sort of domestic risks. We saw yesterday NERSA awarded Eskom around 12-13% tariff increase for the year to come, and that's much lower than the initial 30-something% that they asked for. So it's above the inflation target band and way above the average, but it's much less than we initially feared. The real big uncertainties are coming from the international economy. It's related to President Trump and his plans for the U.S. economy. So if he goes ahead and levies tariffs on a range of imports into the US, that is going to increase inflation in the US, which means that their Fed is less likely to cut rates. And their economy is growing fast, the labor market is still tight, and they feel they have to keep a lid on inflation. All that taken into account, they're not really keen on cutting interest rates much further. And this week, they actually kept their policy rate unchanged. So in that sense, in the US economy, we're looking at higher for longer interest rates, which means that there's less room to maneuver for South Africa to keep cutting rates. Higher for longer interest rates there also means a stronger dollar relative to the rand, which increases the cost of our imports, which creates the danger of a next round of inflationary pressure. So that's the sort of thing that the MPC looks at. So looking forward, I think internationally, there's not a lot of talk about inflation coming back at any high levels, but central banks are cautious, and there are different approaches for different economies. In Brazil, they've been increasing rates. In South Africa, we've been cutting rates. And I think the US is really the one to watch to see where international rates are going in the year to come. In the past week, there's been some really interesting economics news that you might have caught up on. The expropriation bill was one of the big items that caught the headlines, and we can say a lot about the nitty-gritty of the bill. I think the long and the short is that on paper, it doesn't seem like it's going to immediately cause a lot of redistribution of property or land, or that there's going to be any sort of large-scale expropriation. That's not what the bill is about. It's not the expropriation without compensation debate from 2017, 2018. This is something much more procedural that's now been signed into law. But it does create uncertainty for the government of national unity, where the ANC is in favor of this bill and the president signed. Other parties are really opposed to it. And we saw the DA leader having an emergency meeting with the president ahead of the ANC Lekgotla to talk about these issues. So it causes strain within the government of national unity. And we'd rather see them all moving in the same direction and add momentum to the reforms that everyone's hoping for than anything else. Internationally, there was a big stock market event with the price of Nvidia stock crashing and pulling down the index this week in the US. Different reasons for this that you find in the explanations on the internet. On the one hand, it's the story of the new Chinese AI saying, do you really need those advanced NVIDIA chips and expensive American AI when you can have the Chinese version that is less energy intensive, less water intensive, just as powerful, but built cheaply? So that could be a reason for a loss of value of these NVIDIA stocks. But there's also the case that later during that day, President Trump levied tariffs on these chips coming out of Taiwan. So maybe someone tipped off the traders beforehand saying this tariff is coming up, and they decided to sell NVIDIA before the tariff got implemented. So different reasons, but a sort of exciting week in the US stock market. Looking ahead beyond just the repo rate decision, next week and the weeks to come, the big South African news items will be the State of a Nation address, and then later on in February, the national budget speech by the Minister of Finance. So I'll keep you posted on that. Thank you for watching the Economics Weekly. Please like, please comment, please share, and I'll see you soon.